My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. Safely make $10,000 per month options trading for beginners, selling puts by Invest with Corey. As many of you know, Corey manufactured and fabricated a lot of his backstory. In fact, I believe he's the most dangerous predator that I've ever reviewed. He's king of the mountain. The only person that's close to him would be Felix Pren from Goat Academy. He has a ton of lawsuits in his past, including an arrest for theft, and he also has another arrest for theft in North Carolina, as well as over 15 police encounters. Also, I've had a lot of people email me and comment about how they're disappointed with his Discord. They've tried to get refunds and he's denied it. So they've had to file chargebacks and complaints with the FTC at reportfraud.ftc.gov. However, all that being said, maybe this video is going to surprise me. Maybe it's incredible. So let's see what Corey has to say.
Make $10,000 a month trading options in your account. Well, if you do, you've come to the right video. I am going to show you exactly how you can leverage trading options for safe, consistent, passive income to generate up to $10,000 a month or more while you live your life and do the things that you want to do. Let's dive.
Real quick, I can automatically tell that he's targeting traders and viewers who are very gullible without much experience. Trading aggressive put options works until it doesn't. In fact, despite being in a bull market in 2024, there were 2 days, one on August 5th, 2024, and the second on December 18th, 2024, where many people who sold aggressive put options would have blown up their accounts. So if anyone tells you that you can sell aggressive put options and make a very large return and crush the market every single year, in my opinion, they're lying to you and only trying to separate you from your money, and it's only a matter of time until you blow up your account.
Right in, we're going to talk about the different stocks, strategies, and I'm going to show you exactly what you need to do in order to generate this safe passive income every single month. Also, stick around to the end of this video because I will show you a very pro tip and strategy that I teach my students to help make this an even more powerful and safe, passive, consistent income strategy.
Oh,
so
yeah.
You don't want to miss that either.
You definitely don't want to miss that.
My portfolio right quick to show you that even though I have $600,000 in my small account and I have buying power of $1.1 million, I only utilize about $60,000 a month, and I'm only making a handful of trades every single week. I know all of this can seem overwhelming, but it's quite simple. I'm going to show you guys exactly how to do this.
It's quite simple. All you have to do is pay me, Invest with Corey, $5,000, and I will teach you how to sell aggressive put options until the market blows up, in which case I will keep your money. Obviously, I was saying that as a joke, but in reality, you do have to be very careful selling aggressive put options because there's a high chance that due to a volatility expansion event, you can end up in a margin call.
And then we're going to sell to open your cash secured put. Then you just set it and forget it. And you'll be able to live your life, do the things you want to do while you're collecting juicy premiums and allowing time to work on your side and decay the options. It's that simple. Understand that theta works.
It's that simple, guys. That's all you need to do to get rich.
In your favor as an option seller. If you sell a put option at $700 on Meta and the stock is $728 like it is right now, come Friday, if the stock is still $705, hey, theta has eaten away at that stock and it's completely or utterly worthless, and all the premium that you collected stays in your brokerage account. The only time you have to worry is if the stock drops below the strike price of your cash secured put. If this happens, you can be assigned the shares, or you can roll out a week or two or further and down to a lower strike price, giving you more theta, more premium, and more time. It's that simple. And
when you roll a trade, you're basically locking in your losses. It's not magical. I think it's okay to make very minor adjustments to a trade. Looking back on my experience, if I had simply closed out trades that I no longer had confidence in, where the current market price had penetrated the put strike price, I would probably be better off. So overall, from my experience, I think it's very prudent to be careful when it comes to rolling.
Let's show you exactly how to do all of these things. Most important thing to understand when selling put options is that selling is safer than buying. When you buy to open a put option, you are entering a long position. You are expecting the stock to go down. For example, if you sell a $400 put on Microsoft and it goes down to $395, on expiration, you will be assigned at $400, which is why it's always best to sell puts that are in a safe range and where you're comfortable owning the stock. If you're selling cash secured puts, it means you have to put up the collateral for the underlying asset in order to sell the option. For example, if I sell a $400 put on Microsoft, the cash secured put means I would have to put up $40,000 collateral. If you were selling naked options, which we won't really talk about in this video, it would be 20% of that $40,000.
He's wrong there, and he doesn't know what he's talking about. Both the cash secured put and what he described as a naked option, they're both naked, because naked means that when you sell a put option, you'll realize your maximum loss if the underlying stock goes bankrupt and declines to zero. What he meant to say is that when you use margin, which is what he's actually using, then the brokerage will require around 20% of your maximum loss as maintenance margin. So for example, if you sold one put option on Microsoft with a strike price of 400 and you were using margin, then the brokerage would reduce your buying power by $8,000. What he said previously is completely wrong.
$8,000 or $9,000 per put option, but that is an option that you can always exercise in your portfolio as it's your money and you could do whatever you want.
I have no idea what that means. An option that you can exercise in your portfolio and that's your money and you can do what you want. That doesn't make sense either.
To implement this strategy to make $10,000 a month or more, you want to pick a very good stock. For example, Microsoft or Apple. Google is pretty good. I also love Tesla right now. It's really volatile. I
agree with him there that Microsoft, Google, Tesla, etc. are really good stocks to sell puts on. Personally, I would probably stay away from Tesla at this specific moment because the recent price action has been very negative, but the other ones I agree are good opportunities.
Microsoft and Meta are two of the safer big stocks, and these stocks are also a lot better because if you end up deep in the money, for example, you sell a $700 put on Meta and then Meta goes to $680, you can roll out 2 to 3 weeks and down to $680 and still collect premium. This way it gives you time to keep up with the stock so you don't get assigned. However,
if your put option was $20 in the money, you wouldn't be able to roll the option from in the money by $20 so that it's out of the money by simply rolling by 2 to 3 to 4 weeks.
On stocks like SoFi, Palantir, SoundHound, and smaller stocks, it's going to be a lot more difficult. You'll end up having to roll out several weeks or a month just to change $1 in direction versus the ability to do such an action on Meta.
That's also completely false. I think this guy has no idea what he's talking about. When you're trading a smaller stock like SoundHound or Palantir or SoFi, there's a higher implied volatility on those securities, meaning that the market expects greater volatility and greater movement in their underlying price movements. As a result, it will be easier to roll and manage those positions than it will be for a well-established stock like Meta or Microsoft. This guy, in my opinion, has no idea what he's talking about.
Or Microsoft, Tesla, these stocks have more implied volatility, and therefore they allow for more drastic moves and more premiums.
That doesn't make any sense. All right, let me show you something real quick. Let's check Microsoft. Its current IV is 19.26%. Let's check Meta. Its current IV is 27%. Let's check SoundHound. Oh my God, its current IV is 142%. Let's check SoFi. Its current IV is 53%. I really think that I should charge Corey because he has no idea what he's talking about and he's giving very bad information.
They work out a little bit better.
The funny thing is that he's charging his viewers while he learns on the fly. That's hilarious to me. It's such a grift.
So let's go ahead and start building the plan for us to make our $10,000 a month. You want to make sure that you're selling puts on stocks that are near a bottom or near a big support. This way, you're not selling puts and getting assigned consistently, because that means you'd be buying the shares and entering the wheel strategy, which is fine. It's a great strategy to run, but you always want to try to at least sell puts near the bottom. You wouldn't want to be selling puts on Microsoft up here at 447 because you saw what just happened. However, when we scroll to the left on this chart in time, we can see there's a lot of support at 405 and 400. So what we're going to do is we're going to sell weekly put options. For example, a weekly put will be $250, and if you go bi-weekly, it will be more than $250. It might be $400 or $425. If we do it this way every single week, it's better, $238. So if we do $238 times 4, we're making $952 minus $640. So every month we bring in $300 more. So it's better to sell.
Again, this guy has no idea what he's talking about. First of all, if you sell the 405, it's not going to fill at 238. It's going to fill likely at the mid price, which is likely going to be around 228. Also, by selling a put option, which is so aggressive, you are likely going to get assigned. And the problem with getting assigned, especially when you're using margin, between selling a put option and going long shares, your brokerage is going to require around 2.5 times more buying power than it will if you sold that option. So if you sold that 405, you're going to need slightly over $8,000 of buying power in order to make that trade. But if you're assigned those shares, then you're going to need over $20,000 to take ownership of those shares. For this trade to become in the money, Microsoft only has to drop 1%. If you make a bunch of these trades, then you can easily get put into a margin call. This trade, in my opinion, is very reckless, and I would give it around a C grade. The only people that would think that this is a good trade are people who do not have a lot of experience.
Weekly options. Now, on stocks like Meta, Apple, and of course Microsoft, you're okay selling a delta of 30, 25 to 30. I think 30 is totally fine as long as you're near the bottom. If you're not quite near the bottom, if Microsoft was, say, at 415, 420 or higher, I'd want to sell 15 to 20 deltas, maybe 25. So we're going to go ahead and we're going to sell 2 weekly puts on Microsoft, and we're going to sell these at 405, and we probably get filled for about 235. And to preview that, that's going to give us $468 per week times 4.
You're not going to get filled at 235. It's much more likely that it's going to get filled at about 228.
Times 4, $1,872 per month. Now we're going to go ahead and look at Meta.
So it's interesting that he didn't actually show that trade get filled.
Great stock. There's a lot of support at 690, and there's still a good amount of support at 700. It's in an uptrend. 690 is really the safe spot going week out or 2 weeks out. You could sell 700, but let's take a look at the deltas and see what we're looking. If we go at a week on Meta, you can see that the delta is 14 at 700, and at 690, it is a delta of 9, which is very, very safe. In fact, it's a little too safe. The premiums are very low. In a very large account, you could sell a bunch of these and be a lot safer. But for this example, I would think that a 700 would be more than good enough because this is $30 out of the money and it's a 14 delta.
Considering that Meta has gone up almost every single day over the past 3 weeks, I definitely wouldn't sell the $700 strike here. I would grade this trade a D+ because I think that Meta is prime for a pullback. Also, because this strike price is very expensive, it's going to use up a lot of available buying power, whether you're selling it as a cash secured or whether you're using margin. Corey doesn't seem to understand that technically he's not selling cash secured puts. He has a margin account, which is why it said that his buying power is twice his net liquidation value. Yes, he has the cash available in his account to buy those shares outright, but he's not securing that position with cash. Instead, he's actually using margin.
705. In this particular instance, I think a 14 delta is very safe. So we will sell 2 of these. Close to $2 if Meta was to go down a little bit in the morning. And it does this from time to time. It's the best time to open up. So we're going to get $398. We're just going to say 400.
The weird thing is that depending upon when he put this trade on, because he used the time in force of day, it would likely expire before the market opened tomorrow. So in my opinion, I don't believe that he actually plans on getting this filled, because if he wanted this trade to get filled, then the time in force would be a GTC or good to cancel.
100. So we are now at about $3,400 to $3,500. We're halfway there already, and we're only selling 4 puts. Now let's go over and take a look at another stock like Tesla. Tesla is very volatile, but there's a lot of money to be made. We can also look at MicroStrategy. I really like MicroStrategy because they are leveraging and utilizing Bitcoin as their financial treasury, so to speak, because they have so much Bitcoin. So we go out a week, the 290 is a very safe put. It's in this gap right here, which is support. Gaps are always support.
Yeah, gaps are always support until they're not support.
Strategy, and I usually do yellow on my support blocks. So doing a 290 is $34 out of the money. And I think this is a very safe play. So we'll go to MicroStrategy, then we'll look at Apple and some other stocks. So we want to diversify. With Meta and Microsoft, we're looking in the tech and AI sector. Now we're looking at Bitcoin, and then we'll move on to something else to help diversify the portfolio a little bit while selling these puts. With MicroStrategy going out 1 week, we will look at the 290, and the 290 is about $156. We'll go to the 300. That's a 16 delta, lots of open interest. We will sell 2 of these for about $285. And we'll
It's strange to me that he doesn't understand that trades get filled at their mid price. For him to believe that he's going to get filled at the ask shows me that he really doesn't have much trading experience.
like 2. And there we go. This will generate $568. And we'll times this by 4. And this will give us 568 times 4. This is $2,272. So we add that with 1,600 from Meta, and then we add the 1,872 from the Microsoft. We're already at 5,744. This is a pretty good month already. We're already generating pretty close to $6,000.
The issue is that just because you collect premium, you still have that obligation to purchase those shares. It's not profit at all until those options decay. I would grade this MicroStrategy trade at around a C-.
And if we get assigned, we now hold these shares. And I'll make a video. If you guys want to see a video on what to do once you're assigned on these puts and how to sell covered calls and how to exit these positions for even more profits, leave your comments below.
That's funny because he claims that he built all of his wealth and had hundreds of thousands of dollars, yet at the same time he was being sued by his landlord and then wrote a letter to the judge indicating that he was unable to pay rent.
Discord, as you can see by the comments on the screen, they're making very good, consistent gains. I have students.
Other people have told me, and I have no idea whether this is true or not, and there is no way to verify this, that Corey uses fake accounts in his Discord to make it seem that they're making a tremendous amount of money. Now, again, I have no way of verifying that, and this is just my opinion based upon what other people have told me, but at a minimum, I would take what he just said with a grain of salt.
Making between 10, 20, 30% per month or more. And I have students.
That's so funny. If you were able to more than double your money every single year for 20 years, you would probably be a billionaire by the end of that time frame.
Have grown their portfolios from 40,000 to over 100,000 and others from 300 to 800K.
We should definitely get those subpoenas ready because I don't believe that that's accurate.
You guys want...
In my opinion, you're much more likely to lose money over the long term by trading a strategy like this than actually making any money.
Another strong stock to look at is Palantir. We can see there's a lot of support on Palantir around 114. I would not want to sell puts at 114. I would want to go under all of this resistance.
Let me guess. So he's going to choose 105.
I'd be selling 110 puts.
Oh my God. This guy chooses strikes that are so incredibly aggressive. It's just asking to get people in trouble. Even the crazy number that I threw out there at 105 is not aggressive enough for Invest with Corey.
A lot safer. Go ahead and take a look at Palantir. And going 1 week out, we can see they're about $100 each, about 110. And these are deltas of 20. This is fairly safe. The collateral is a lot less than the big stocks like, say, Meta. You could sell 3 puts for every 1 put that you would sell on Meta.
Math definitely isn't Corey's strong point. If Palantir is trading at around $100 and Meta is trading at around $700, that's not 3 times larger. The amount of buying power difference between selling one put option of Palantir at a strike price of 110 versus selling one put option with a strike price of 700 for Meta is more than 6 times. It's not 3 times.
Sell maybe another 4 of these every single week at 110. Now you can stagger these. You could sell 2 110s and 2 112s. You could easily do that. In fact, I might actually just do that. It's a little bit safer. We'll do 2 of the 110s, which will generate 218 a week. And this will be just a little over 880. So we'll say 880 a month. And then we will sell 2 112s for 155. And this will generate us $308 per week. And what we'll do is we'll take this $308 and this will be $1,232. So there we have it.
Oh man, I'm starting to think that people who follow this guy actually deserve to lose their money, because in my opinion, people who are actually experienced, who watch this guy, probably don't think that any of these trades are good ideas. They're just way too risky.
So we have 57.44 plus 12.32 plus 880. You can see right there, we're pretty much at $8,000 a month. We have 2 puts on Meta, 2 on MicroStrategy, 2 on Microsoft, and 4 puts on Palantir, $8,000 a month. So now we're looking at another great stock, Tesla. It is in a downtrend, but it's hit a very big support on the bottom at 320 and 330. So what I would do is I would definitely want to be selling 320 or 330 puts, which are fairly safe because the stock...
Again, that's way too aggressive in my opinion, but I don't think he really cares. So let's continue onwards.
Is now above the 100-day moving average, and the 10 and the 20 have crossed over as well, and they're about to cross over the 100-day average, which is also very good. So this is a good opportunity to start selling some puts on Tesla. So I will go out to 320 most likely on the put to see what that looks like, and we're looking at a delta of 6, which is a little on the low side. We can go to 330. That is a 12, lots of open interest and lots of volume. Pay key attention to volume and open interest. This way you get filled on these puts a lot easier. So we will go ahead and sell 2 of...
The reality is that for Mag 7 stocks, you likely don't even have to look at open interest, because there's so much liquidity that these trades are going to get filled at the mid price.
These puts, and we can get about $2 each. We'll sell 2 of these, and this will generate us about $400 a week. So 400 times 4 is $1,600. So we were at 78, I believe, 78, 77 plus 1,600. We're at $9,500 a month. This is how easy you can safely generate $10,000.
It's definitely not safe. In my opinion, you're just asking to blow up your account if you follow this strategy.
Month selling far out of the money put options.
I don't understand. How is it far out of the money when Microsoft can fall 1% and then your position is going to be in the money? That doesn't make any sense to me.
And all you have to do is just sell the put options, do your due diligence on the stock, of course, sell the put options and let them expire worthless. So in this instance, I would like to run 3 to 5 spreads per week. $1,000 capital to make $30 or $40. So I will pick a stock like Meta and I'll go somewhere very safe around 680 or 690. So I'll go over to Meta here and I will click on 690 on the bid and then click on 680 on the ask to buy. This is a spread giving me about $40. Roughly. We could probably get filled a little higher, but we'll just leave it at the mid of $40. And you don't want to run all of your spreads in one stock. I'll run 2 on Meta, 2 on Tesla, and maybe 1 or 2 on Google or Amazon or something like that. But just to give you an example of what 5 spreads would make you, we're going to do it on Meta just as a general and rough estimate. This is going to generate about $200 a week on 5,000 capital. So this is another $800 a month, and this puts us to about $10,400 for the month. And we're making this $800 a month on 5,000 capital. 500 would be 10%. So we're making about 15% on these spreads. And even if we lose all of this money in 1 week, that would only be half of the month's income, but you are really only going to have trouble with spreads every once in a while, and you're not going to lose all of the premium. When I run spreads, I'll usually cut out at a 10 or a 20% loss. So if Meta was to go down to say 690, 689, I would just get out at $100 loss times 5 spreads. It's $500 loss.
If Meta were to fall down to 690, you would probably be showing a much larger loss than $100. You'd probably be showing a loss of about $600 or $700.
But we made $10,000 for the month, so it's not a big deal. So we make $800 on spreads this month, $800 on the next month, then we might lose $500. But guess what? We're still up all the premium from before. So if we make $1,600 over 2 months, and then on the third month we end up in the negative $500, we still made $1,100 plus the $9,500 a month for those 2 and 3 other months. So it helps offset our losses. I know this sounds confusing, but this is how I run this strategy. I always implement about 5 spreads, or 1 to 2% of your portfolio, safe spreads, every single week to help gain a little bit of extra money that adds up over time. Understanding put options and selling puts to generate safe, consistent passive income doesn't need to be complicated. You don't need to be glued to your computer all the time to make safe passive income or retirement income. You can do this quite easily once you understand delta and theta.
In my opinion, like I've said numerous times before, this is a horrible strategy where you're just waiting for the market to turn and no longer be in a bull market, and then there's a high probability that you'll blow up your account. This strategy is very simple. He doesn't use any hedging, and also he's selling strike prices, which are extremely aggressive. He's making mistakes with basic options trading concepts, and in my opinion, he's misrepresenting the inherent risk in this strategy by making these trades seem much more safe than they really are.
Sell cash secured puts at the bottom when a stock is...
He's not selling cash secured puts, he's using margin. So in my opinion, this video was very misleading. It can also potentially be very damaging and destructive for people who do not have a lot of trading experience. And I also believe that congratulations to Corey, because with this video and this performance, he will remain the king of the most dangerous predator that I've reviewed. Leave a comment below and let me know if you have any questions. Watch the video that's popping up on your screen right now because YouTube believes that you would enjoy it the most. Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and a review. If you have any questions, visit beststockstrategy.com and send me a message.